Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning. Oh my gosh, hold on. That was too loud. How are you guys doing this morning? Well, yesterday, pretty boring day. Market, it looks like the traders were all trying to short the S&P 500 yesterday and then got squeezed into the end of the day. So we're higher today. There is maybe a little bit more news and information that we might be able to trade off this morning, but we are in that kind of quieter time of the month. So we'll see. I'm not gonna get my hopes up. Yeah. A couple more rollovers we got to do here. Let's look at the ES first, so you can see there. I mean, that's a decent move up, and that is like to new highs, almost touching 4,200. Actually, I think we got to go to a daily chart to look at that. Okay, so just note this is the area where like they keep having trouble, right? But I mean, it sure looks to me like it's ready to just keep going. I don't know. Just from the technicals on the charts, that's what it looks like. The actual, like, the fundamentals in the economy continue to look terrible. I think that's why everybody keeps shorting it. But like, it's not going to happen if you're all short. Here's the treasuries. So yesterday in the treasuries, we got another little continued move down, right? I mean, a lot of that happened in the overnight, right? We only had a little bit of that during our session. And now here this morning, we're actually recovering a lot of that. So we're back to 3.57. Oil down yesterday. Gold and silver also you know, hurting a little bit, but I mean, it's still just a pullback. Gold is still above 2,000. They did find their support there yesterday, so I'd like to see that in gold and silver. Copper, not too bad. It's mostly flat here though. Bitcoin seeing a little bit of a decline yesterday, but now this morning a strong pump again. And the dollar, well, the dollar has lost its gains from yesterday, but nothing too significant so far. So that's basically where we're at. So that's what we got going on here. Are you going to talk about chart analysis is only stocks? How about Forex? Okay, so you notice like I went through all of the charts and I didn't really do any kind of chart analysis whatsoever. I just kind of said what was up and down. That's because the charts don't really tell you a whole lot. So the market is very statistically efficient because orders have a very strong impact. So like you go and you buy something, the impact that you have on it from buying is much stronger than you realize. And because of that, any kind of like statistical abnormality that you might find in the market, it's very easy to remove them, right? Makes the market very statistically efficient. On the other hand, though, market's not very informationally efficient. Like current price is not reflective of all available information. So if you're going to trade, there is a lot more edge available for you in the area of looking for informational inefficiencies, things that you know that the market is not able to correctly price in because, you know, like yesterday, for instance, like the fundamentals don't look very good, but because everybody is short, they just get squeezed, right? So we're looking for things that we have that we might know that could predict future orders, and that's how I approach the trading. So I don't really talk much about chart analysis whatsoever because it's pretty useless. And we're trading to futures, so I'm much more focused on the market segments. So like we talk about Forex. I mean, I talk about currencies, but I'm looking at them from the FX futures and not, doing the Forex trading. I wouldn't recommend doing Forex trading. We talk about individual stocks only in as much as it is those stocks are relevant to the current market. Oh, your new computer? Very, very good. That should help, right? Then we can run our nifty little indicator. All right, so let's see here. So speaking of stocks, by the way, it is earnings season. So we do need to keep a little bit of tabs on what is on our earnings calendar this morning. I don't think, is it Goldman this morning? Bank of America and Goldman. Okay, and their conference call is at 9:30. I think that's Eastern time. It's not telling me what time it is. I'm pretty sure that's 9:30. So that would be in an hour probably. So that must mean that we should be able to go over to Zero Hedge and see what they had, They're trying to. I really don't think that there's that many people that are into the Bitcoin right now. Oh, New York Times hit piece. Okay. No, I don't see it yet. So we might need to wait a little bit. I'll just keep that tab over here. The power supply is on back order though. If I get everything else before that, I'm gonna cancel it and order from a different. What kind of power supply are you getting? So can I show you my conundrum right now? Okay. So I've got this rack, so I want to get rack mount case. I don't think I'm gonna do it for a while because I want to build a cableway that attaches to the back of the desk that it'll be like a long box with like a lid that pops up and maybe some cable management stuff inside of the lid, and then on the front like a brush strip so that the cables can come through the brush strip and they'll stay there. And then I will move the computer over to a rack. And at the same time, I want to be building a new machine. So I want to have like 2 machines in there, right? Okay, so we need to find a rack mount case that can fit your regular computer components, because most rack mount cases are like specialty. You just buy the whole server, for instance, right? Okay, so these guys, Sliger, I don't know how you pronounce it, but they make cases. You got 4U and 3U. Actually, I'll show you both. They're both kind of interesting. So like the most basic one is this thing right here. Okay. So it's got your regular expansion ports on the back, and it looks like you can use a regular ATX power supply, or you can get these newer oh, what are they called? There's a new type of power supply out there. I think maybe if I come over to here, there's like SFX, I think is what it's called. Yeah, SFX. So on these ones for 3U, to fit a GPU, you probably want this one right here with PCIe with a riser. So in this one, you mount the graphics card that way, and that way you have more room to run your to have a power supply, because some of these new power supplies are like really tall and really long, right? So this one, you would probably want an SFX power supply, right? Anyways, so I come in and look at it. The other thing is the water cooler that I have right now is too tall. Or not the water cooler, just the air cooler that I have right now is too small. So I'd have to get a different air cooler. Well, I could get, oh, and then you need fans. So you need the fans. You could add the cooler. I mean, look, a 360 air a cooler with the AM5 because I want to get an AM5 machine. Okay, might as well because that'd be about as cheap as the fan that I would get. Okay, and then rack slides, I think yes, because that allows you to like pull it out and stuff, and allows you to have something that holds it on the backside too instead of just the front. Okay, so all of that, $463 just for your computer case. Most people, when they make a computer case, they only spend like $100, and I have a case out there right now that I could use, right? And I want 2 of these. So I'm spending $800, $900 just for the case to do it rack mount. Ugh. Well, I don't want to go that far yet, right? Because if I'm going to be spending that much, I might as well be buying better video cards instead and just putting them in my current cases. So that's the conundrum I'm in. You're getting a Corsair. Okay. Why would it be on back order? That's so funny. Yeah, anyways. The rack mount route is expensive, I have discovered. Good morning, Walden. I keep hearing like... Oh, turn that off. It sounded to me like my speakers were on, but... All right, now here's the thing. I didn't eat breakfast, so I'm going to go quiet for a little bit, and I'm going to eat breakfast. Yeah, it didn't need to. Well, the rack mount doesn't make it more powerful. I mean, that's the whole thing. What video card did you get though, Uzi? And what motherboard did you get? Oh, a Quadro. Okay. So not too crazy of a card. Okay. So that's a 3rd gen Ryzen. Gotcha. You didn't go the AM5 route. I tell you what, man, there is some really interesting stuff going on with hardware. And for the first time in a long time, interesting stuff going on with hardware that's going to be relevant to trading. So like the first thing is that there's a new motherboard socket type for the AMD machines, right? So if you get, like Uzi is doing, a 3rd generation Ryzen processor, like a Ryzen 4, you get such a good deal on it right now. So I think that what Uzi's doing, and he's getting his bang for his buck. I think you're doing it the right way. Now, one of the things that's going on with the AM5 motherboard, though, is they have 3D processors. So they've got this new processor type that they call a 3D. And I can't remember the details on it. I think that it is actually like multiple layers or something like that. But these processors, when they came out, they don't offer too much of like a performance improvement over the other processors that AMD already had, but they use significantly less power, right? So that's the first thing, is that we're on the precipice of a pretty significant power consumption improvement on our processors in the next generation, which is going to matter if you've got this like running all the time and stuff, right? Especially since power is getting so expensive in some parts of the world, right? 1350. Okay. Then the other thing is the graphics cards, man. So, you know, we've just come out of this pretty crazy time with graphics because everybody was snatching the cards up to do Bitcoin mining, right? I think you're going to see that shift. I think that AI is going to become so ubiquitous that people are going to want graphics cards to run their own AIs. So the way that it works right now is you go to like openai.com and you just use their chat GPT, right? So you're using their server resources, and to train that model that it uses, they're using a ton of data, and it takes a lot of computing resources to train that model. But if you want something that's custom built for your use case, for instance, you wanted to make something that was like a trading assistant, you would need to give it more information, right? You're gonna have to run all that on your own machine, and then at that point, the kind of graphics card that you have and how much computing power you have matters. That's why I'm building this rack and all of these other things, is because I'm anticipating that 5 years from now we might need like, you know, 4 graphics cards to be running AI stuff. All for a computer that's on for about 4 hours a day. Well, that's a lot for most people. I mean, if you're comparing yourself to me, who has the computer on 8 hours a day, 7 days a week. Well, I never turn the computer off, but I mean, I'm on it a lot, right? I'm a weirdo. What I do is not healthy. Don't be like me. I'm telling you, kids, I've used the computer and the internet and the social media more than anybody. I have some issues with the way that the computers and the internet have gone that I don't think are healthy for you. Especially the social media, man. It is not good to be spending a lot of your time on social media. Your brother does the same thing. Yeah, gotcha. Well, you don't have a reason to? Well, I tell you, what you need to do is you need to get into a game. You need to get into like what is the EVE Online? There you go. You need to get into EVE Online, and then you would want to spend, you know, 8 hours a day. There you go. Brad knows what's up. I want to get a machine that has 4 A100s. That's exactly what I want. So A100, slightly smaller graphics card, but it's all tensor cores. So it's just for doing AI, and they're expensive. They're like 2,000 a pop or something right now. Not your thing anymore. But have you played EVE Online? Because it's not really a game. EVE Online is like Microsoft Excel Simulator is actually what it's like. I don't actually know. I've never played it, but from what I'm told, it's like a spreadsheet simulator. It sounds terrible, but you guys that are into trading tend to love it because it's all about economics and stuff. Are they actually 10K right now? I don't know. When I looked at it, it was an amount that was like, oh, I'm not paying for that anytime soon. I was frustrated because yesterday, I did send an email out to them. I don't think I got a response yet from the CME. I did send out an email to the CME to get time and sales data, like the whole data series. So like all ES data ever, $2,000. And there's like other options to get it month by month and everything, but that wouldn't make it cheaper for me because we want 5 years. So you might as well buy the whole data series. So if you guys want to like chip together, share the data, something like that, maybe we could work on something there. But until then, Uzi is our final hope. Uzi, we should be able to get 3 to 4 years from Uzi's data. Oh, and I'm also talking to Ninja Trader, but they had some questions, so I gotta. And then maybe I'll have the same data that Uzi had, and I'll be able to do it myself. But okay, so we do have. Oh, by the way, another thing, Jigsaw. If you use, where is it? Thought there was a coupon code. Oh, maybe I'm wrong. But if you want to get Jigsaw, they're having a $100 discount sale right now, and today is the last day. So if you're in. And of course, there's always my affiliate link in the video description below, but that one gives you, I think, like a $30 discount. Changes, but right now I think it's a $30. You think you have the best data, but do you get 5 years worth of tick data so that we can look at the volume profiles from 5 years ago? That's what we need. For the use case, I think $2,000 paying for that data probably not worth it. But I bet you there's some retail traders out there that'd be willing to spend that much. Well, I am not seeing the gold. I'm not seeing Zero Hedge synopsis of Goldman's earnings yet, but I am seeing stuff on Twitter here, and it sounds like they have an 18% year-over-year drop on revenue. That's pretty ugly. I don't know what the consensus forecasts were and stuff, but I'm a little concerned here. It looks like Bank of America did good. Well, here's JP Morgan. We were looking at them last. Let's see what the damage is in Goldman. Oy. Well, okay, it's down to like yesterday's levels, but that hurts. That hurts. That is like how much of a drop is that? I'll just go to a 1-day chart. Oh, I can't. That doesn't show it to me. I think that's like a 5% decline. No bueno. On our ticker chart, is that one of our top? Maybe not. Wait, what? Elon Musk confirms development of non-woke AI bot Truth GPT to rival Microsoft and Google. Oh boy. Oh boy. I bet you when that comes out that people will find the things that it answers wrong and then eviscerate it for being called Truth GPT. I don't know if that's good, if that's branding that's going to work out for you in the long run. What am I eating? Food. Just food. Today is a slow day. It seems like it. I mean, yesterday was slow. We did get U.S. building permits, which came in at 1.413 million versus 1.415. And, oh, I thought we had stuff at 8 o'clock, but I guess not. So, yeah, we already got our data. Market didn't really react too much to it. And we do have a Fed speaker today, but it's not till long after. Excuse me. Yeah, who is it? Bowman. Yeah, Fed's Bowman speaks at 1 o'clock Eastern time. So that's going to be outside. That said, I think the equity market's kind of got to do something today. Like that short squeeze yesterday ended up being pretty big. Like if the bears don't mount some sort of a move here, it's going to have to continue squeezing. A marshmallow? No, it's just an egg sandwich, man. What do you... It's an egg sandwich. I don't like it runny per se. I like it kind of like soft though. You know what I mean? My wife, she likes her egg yolks like they have to be completely solid, like dry, and ugh, I don't like it. But I don't like it runny either. And they're locally sourced from my backyard. So it's good tasting egg yolk. Get that nice orangey color. Runny eggs, milk, and trading the other day my wife was like, "Oh, I hear that real milk instead of pasteurized milk is really good for you. We should try and find some." Yeah, good luck finding that. I keep getting these emails from a certain spam mail list that I'm on, and they drive me crazy. I'm like, oh, I got something there. Oh no, it's just that stupid spam. Okay, I want to read this story about Bitcoin hit piece. What happens when America's purported paper of record promulgates an unabashedly hit piece against Bitcoin's so-called climate impact? It is not. Okay. Here they're going to come in with like all sorts of BS because Bitcoin does have a negative impact on the environment. Stop the Press's movement erupted over the weekend, drawing attention to several inconvenient truths about how the New York Times print edition gets made. Oh yeah, I'm sure that they're gonna. Here's the thing. Bitcoin does have a negative environmental impact, but it's the New York Times, and you don't throw stones from glass houses, right? Well, let's recenter the DOM here. Yeah, it kind of seems like you're getting another, continuation of the downside action and flattening, and that the treasuries are like determined to eventually get to 4% again or something. But I feel a little frustrated because last week we had a good trade, right? In the treasuries where we were like over here, I think. Let's see. I think it was on the Thursday. I think it was on the Thursday where we got faked out of the trade, and then ever since then it's just been down. So if I had really been determined, I don't think that I would have been so determined to hold that, but seems like the direction is down, right? The problem for me is like finding a good spot. The flows are not too strong this morning. I'm concerned that if I took a trade that they would just push it against me because it's that quiet, you know? Yeah, on ZN. No, well, I had it in the micro 10, but you know. I think that it was like long 3.8 3.4 or something like 3.455. Yeah, that's what it was. It was long 3.455. So, I'd be up like at least 100. I want to read about Goldman Sachs' disappointing earnings. It's not here. Well, let's go and read it on CNBC. Oh, man. Goldman Sachs misses revenue estimates after taking a $470 million hit on Marcus loans. Okay, so earnings was 8.79 versus the estimate of 8.1. Revenue 12.22 billion versus 12.79. Earnings fell 18%. The EPS beat was also driven by Goldman's sale of consumer loans because it allowed the bank to release $440 million in reserves for loan losses, which added roughly $1.20 per share to earnings. Oy. Unlike its more diversified rivals, Goldman gets the majority of its revenue from Wall Street activities, primarily trading and investment banking. Heading into the quarter, analysts wondered whether turmoil during March, in which two American banks failed and a global investment bank was forced to merge with a longtime rival, would provide good or bad backdrop to trading. While JP Morgan Chase and Citigroup beat first quarter estimates in part because of better than expected fixed income trading, Goldman's traders didn't fare as well. Fixed income trading revenue fell 17% to $3.93 billion, roughly $230 million below the street account estimate on lower activity in currencies and commodities. Equities trading revenue slipped 7% to $3.02 billion, edging out the $2.9 billion estimate. Well, so that's interesting that Goldman did so poorly compared to some of its rivals in that respect, because those are the areas where they typically do well. And one of the reasons why I pay particular interest in Goldman's earnings is to get some information or read about what was the environment really like. Whoa, hold up. Okay, so I was not expecting a Fed speaker at the moment, but I guess somebody's on TV and is saying something. It caused the market to sell off on his comments, but it looks like they're recovering it, and it's an exclusive interview with Fed's Bullard. It looks like it was like he was interviewed ahead of time and they're just releasing like the edited thing. What does 0DT? It means 0 days to expiration. Yeah, so those are options that expire that day, right? So if you buy it that day, it really has to move in order for your options to expire in the money, right? But if they do, you get paid really well. So it's like 10 to 1, 20 to 1 type of trades. You cannot tell me that's gambling. I think a lot of it is, yeah. But you know what? It's not all coming from retail traders, as I understand it. As I understand it, it's not just retail traders. So it seems that the hedge funds and so forth have a reason to trade it, whatever that is. Yeah, so I think that what happened yesterday was a 0 days to expiration for sure. That everybody was going short, and then they got squeezed, right? Like what's happening is that what keeps happening is these guys will take these big positions in the 0 day to expiration options, and then when they don't work out, they unwind it, and you see a big recovery in the S&P, right? Oh, I'm sure that Citadel is making a bundle from that stuff. Although, did you know there was a court case relating to Citadel where information about like two of their largest algorithms came out, and from what we can learn from the court documents, these algorithms were mostly about front running. In other words, they were taking advantage of differences in prices between what you can get from the public versus what you get if you're directly connected to the exchange. And those were like their most profitable algorithms. And people had assumed before that you couldn't really make money from doing that. There wasn't enough opportunity in it, yada yada yada. And then when we found out that that was like one of Citadel's most profitable algorithms, knowing that and looking at how much money Citadel makes, one has to wonder if there are some problems in the way that the market is structured, right? Yes, result of large notional unwinds. It's a squeeze. Yeah, and I think yesterday was a squeeze. I mean, I'm still of the mind that we should be below 4,000. Like, good grief, even the Federal Reserve is saying that we're going to have a recession in the second half of the year. And the market, the equities market in particular, continues to be, well, let's say they act as though they're completely oblivious to all this information. Well, they could be wrong, though. Like, one of the things that I see right now is that people are saying, oh, well, earnings this season aren't going to be very good. But I think that the bad earnings are already largely priced in. I don't think that they're going to be as bad as some market participants think. And so I don't know if that really ends up being a catalyst to cause more selling. And then the issue is still, like, we're here right below 4,200 and we have like record short positions on. So like, where is the selling going to come from? Right? Well, I think there's a lot of things going on here, but I would just say that the market and the fundamentals are not very well in line right now. I think that what you could see happen is the market climbs the wall of worry and in the end is okay, and we don't get the recession at the second half of the year, you know, and the S&P just keeps climbing up to yearly, you know, that could happen. And then people will say, see, look, the market knew it when everybody was record short. If that happens, I don't think that that's what caused it. I think if that happens, I think that it was kind of a case of the S&P 500 going up and doing well has a positive impact on the companies as kind of like a recursive feedback mechanism, and that's what allowed us to recover. Because right now, with things on the trajectory that they're going right now, we're almost certainly going to have a recession in the second half of the year, right? We only have a recession on ZN. It does seem like that the interest rates reacted more strongly to all of this than the equity markets did, doesn't it? For sure. Well, the 10-year seems to be rotating around this 11 now. We had that spike lower on the Fed speaker, and since then it's struggled to continue pushing down. We need to get just high enough for people to turn bullish. Well, I don't know, man. Like, how can you like just from a charting perspective, okay? Not that the charts are useful at predicting the future or anything, but I don't see how any chart analyst looks at that chart and doesn't see something positive, right? Like, where's my oh, I don't have it open. Hold on a second. Put your money in the bank. I don't know if you'd be actually outperforming retail traders if you have your money in the bank, though. Oh, I can't use that because it's a chart over there. Hold on. There we go. Okay, so like, look at this. Head and shoulders, right? Retest. That's something that should go, right? That's something that should go to there if you're just using pure technical analysis. Right. And, or another way you could look at it is we've got a trend going here, right? Another way you could look at it is we got above, we came back and tested the moving averages and are bouncing higher. Is another way of looking at it, right? It's like this is where it's like so wild to me, is like every technical reading I can pull from a chart says bullish, but the market is like at all-time negative sentiment. How is that? There's no chart traders anymore. Like, it's super weird to me, right? I knew interest rates were affecting when a woman didn't want to pay with her credit card for the car I was renting her, and she told me interest rates were high. Oh. She didn't want to use her credit card because of the interest. That's funny. Back in the Forex days, negative sentiment meant positive prices because traders are always wrong. Yeah. It really is like... Well, okay. So let me try and... Here's my theory on what's really going on here, okay? I think that the Federal Reserve is raising interest rates and is slowing the economy down, and that eventually that will result in some sort of a recession. We had already had a period where the economy was looking pretty hard, but we were able to get through it, so the Fed wasn't done yet. And now we're kind of maybe looking at the end. Okay. So yes, recession second half of this year, pretty likely. Okay. But then what happened was we had this banking crisis, and the market absolutely flipped out about it. And as I was saying at the time that it happened, it kind of seems to me like people are overreacting. It's like one or two banks, they came in, they handled it, everything's fine. Right? And yeah, I think that the market overreacted to it. So everybody came in and got short the market because of that banking crisis. And now the market is basically reverting back to like where it should have been anyways. But that still leaves room for a decline over the summer. That's kind of my like overhead view of the markets. Is that I think that people became too bearish because of the banking crisis. Those guys are getting all those guys are getting all washed out, but then eventually there probably will be a mild recession. Now, if there is a mild recession, that probably will hurt the stock market a little bit, but it might not bring us back to like the 3,600 level. Okay. That's my take. What happened here? Why is my... That was weird. This privacy policy for readme text-to-speech extension popped up on my screen. And I must be an extension that I have on... Let me see here. Yes, I do. Yes, it's one of my extensions. That's interesting. That's weird. It's just weird. I just leave my savings under my bed, safer and more comfortable than... I still don't see anything from Zero Hedge about Goldman's earnings, which is kind of weird. But they're probably going to do a deeper dive later on. This mistake that they made with Marcus has been pretty bad, but when you look at the stock, it's actually weathered it okay. So I guess there's always going to be wrong those who point to other people being wrong all the time. Well, my policy is try not to make too big of an assertion about what is going to happen, because our ability to actually predict that is very limited. So like I just laid out a scenario of like what I think the current outlook of the economy is right now. That does not mean that there's no room for that to change at all. I think that between now and September, it's actually very likely to change. You see this volume right here? I rearranged my desk so that I have my little drawing pad. See how neatly I can draw that now? You got this little point of control right here. I don't do the little drawings as much as I should. Okay, so look, they got through. They got through this 3582, and then there's a little bit of stoppage here. So we may be having the bottom fall out here a little bit. Kind of looks like the bottom is falling out a little bit. They're holding it okay. And here, the spread is to the downside. So we are flattening a tad. Meanwhile, yes, just kind of chilling at 41.95. I don't know. For my style of trading, I just don't, I've been frustrated because I haven't had much in the way of like predictive flows for me to trade off of, but there have been flows out there, right? Like yesterday we could have been long rates. I do wonder though, it seems like 3.6 is kind of an area that the treasuries have difficulty with. Right? Like look at, you see right here on this chart? Like this is just the bottom of the range that we've been in since about mid-March. And we spent a lot of time there in January as well. So will we actually fall back down into this range again? I don't know about that. But for the moment, like, okay, so there's 1,000 at 1410. It looks like the selling is there, but the market makers aren't jumping out of the way. What about CPI core last week? Yeah, okay, so that was all really interesting, right? Because in the end, those didn't seem to have too much of an impact on the market, right? The one that was really weird was the retail sales, because the market did not move the way that you would expect off of the retail sales, right? Well, there's 09.5 again. So I would expect this to slip down through to 08. And it's not quite doing it. Why don't you trade micro? Well, there's, you mean on the small exchange? Oh, you're gonna give me $1? Thank you very much. I appreciate it. That means so don't gift me $1. Do the $1 channel subscription so that you can use the fun smileys. I would make that free if I could, but go talk to YouTube about it. Yeah, it's a little... It sure looks like, you know, when you have a big order just a little bit below the market and stuff, and you're getting some downtrend, then you often sit down and say, okay, so like the selling is probably going to continue to overwhelm them until maybe at 08, and then we could maybe see something, right? But like, look, they're not going for it. Not yet. And we're actually getting some tepid buying there at 09.5. Who are they? I don't know. I don't know who it is selling it today. Not entirely sure. I suppose it could be CTAs. Look at that. Okay, 36.65. So on the main treasury, I don't think that I could pull this one off on the micros, but I could probably take those as she goes. What are you? I don't understand what you're asking, NASDAQ. I don't think I'm expecting anything today, but I'm just saying the way that order flow often plays out is that if there's a big order down there, that they kind of slip through to get it, and they're not doing that, right? So it's kind of like it has been downward trend today, but the reality is that there doesn't actually appear to be that much activity in the market. So if there is a large meta order short here, they are being like really slow because of how slow the market is. And it does appear that somebody sold about 4,000 contracts there at 09.5 on an iceberg. So they may have actually, if there was a meta order, that may have actually been the end of it. Let's see here. We got about 8 minutes to the open. Since this didn't happen, I'm going to cancel those. Now, the split side of that is that somebody was willing to buy 4,300 contracts to fill that guy. So, we might need to keep an eye out for the flow going the other way. The conditions are telling us that that's a possibility. No, you do tend to have a little bit of movement in the treasuries around the time that the S&P 500 opens. So we do kind of have to keep an eye on it around this time. So why does the ZN care about it? Okay, there's 09.5, a little bit more forceful of a take there. See if 09 goes. So nobody's trading it. While it may go to that 08, but I don't think I'm interested in the trade anymore. So a lot of the hedging that takes place in the treasuries is interest rate hedging from equities traders. Basically, they're buying the S&P 500 over here, and then they're like buying or selling the rates to offset the rates that they have to pay from borrowing and all that sort of stuff. A little bit more complicated how you go through the modeling for all of that and figure out how much you would hedge and stuff. But sufficeth me to say that, especially at the beginning of a contract, there's a lot of hedging in the treasuries coming from the equities traders. So there you will tend to see some flows around the time that the S&P 500 opens. Okay, so there was some flow that went through at 09. Oh, actually, this time it was only 35. And it's coming back up there a little bit. I'd still say not enough information to see if there's a long meta order. But it could be out there. I think it would definitely, I think the best situation would be if we bought the treasuries and the S&P 500 sold off on the open. That could be the setup, but that seems like an awfully fantastical setup. Like that sounds kind of like wishful thinking that it'll play out that cleanly. Okay, trading floor audio, talking about Bullard's comments from a little bit earlier. Fed's Bullard discounts a recession talk and favors more rate hikes. Fed should continue raising interest rates on the back of recent data showing inflation remains persistent while the broader economy seems poised to continue growing. It's really interesting that the Treasury market, when those comments were released, they sold off, but since then they've gone nowhere. And I've noticed this for a while. Like this happened to us last Thursday, I think it was, that we had a Fed speaker's comments, and the market was already in a downtrend. And so when those comments happened, you got even more downside. But then that was like the end of it. Was like as soon as people started trading off of the Fed speaker's comments, then it started pushing against them. And you're seeing a little bit of that here now. Bank of America suggests consumer spending is fine in their earnings presentation. JP Morgan also suggested the same from their data. And this in contradiction of what we got on the retail sales data on Friday. So that one's we got to keep an eye on. Well, they're having a hard time clearing that 10. There's a little bit more stacking there at the 09 now. Even though we are seeing buying in the 10-year, we're not seeing it in the other two instruments. That's another thing to keep in mind. So like, look, the 10-year, it wants to go bid. It's holding a bid at 10, even though it's only 500 contracts. But they're not getting the 5-year to go along with it, right? So they're like, okay, guess we wait. By the way, gold getting hammered again this morning. 2007 at the moment. It's just been kind of down ever since, well, ever since the treasury started moving down. Ah, there it finally went. The 5-year's still dragging its feet though. The 10-year seems to be kind of leading the way. Oh boy, President Biden, I'm not done fighting to build a fair tax code and make the super wealthy pay their fair share. An economy where a millionaire pays in less taxes than an educator is an economy that doesn't work. Okay, so that's false. Millionaires do not pay less in taxes than educators. Millionaires, and billionaires pay the majority of taxes. I wonder, you know, because this has always been the kind of the messaging from Democrats. It's like, oh, well, we need the rich to pay their fair share. But again, we are at some of, in terms of tax revenue as a percentage of GDP, we are at some of the highest levels ever, right? So like, maybe the government just shouldn't spend so much. Like if we were having a low amount of tax revenue, and then we could say things are doing okay, and we could take more from millionaires, and we wanted to make our system even more progressive. But like, it just kind of like defies the reality here, which is that the United States is taking in a lot of tax revenue as a portion of the economy, and billionaires pay a lot of those taxes, and we have an extremely progressive, like relative to our peers, we have an extremely progressive tax system. Is just that Joe Biden wants to take it from the market now, right? They've basically nickeled and dimed you everywhere else, and so now the only place that they can go to try and grab more revenue is from your investments. Where they pay their tax. Yeah, well, listen, go and increase the capital gains tax and see what happens. See what happens. Didn't turn out too well last time. I don't think it would turn out too well this time. Okay, now we're starting to see a little bit of upside flow in the others as well. So the flow in the 10-year did give us some early indications of what was coming in here. It kind of looks to me like there was a large meta order selling in the 10-year in dimes. Let's say there was a large meta order selling in dimes, and it eventually got to the point where it met another order, and that other order is now pushing up. Now the question is, how big is this other order? Well, it's already about 7,000 contracts, which is a lot actually for this situation and as quiet as the market is. So that makes me really nervous about trying to take this long from here, unfortunately. But to the point, my point is not to, you know, complain about Democrats and try and make Democrats look bad, but rather to point to the strategy and how likely that strategy is to be effective. And I think that if you go into the election And that was the argument, was the rich don't pay their fair share. And that's all you had to go on. I don't think that that's a winning argument, because again, it just kind of contradicts the reality here, which is that we have a very progressive tax system, and we are taking in a large portion of the economy in government. So our budget issues are more on the spending side. Okay, well, I said that the dream situation here would be Treasuries bid and the S&P 500 sells off. That's what we're getting right now. The overspending is hurting growth. Probably is, yeah. Well, I think there's another factor on growth, and it's hard for me to sort the two of these out. But the other factor that I see on growth is that because of all of the regulations and so forth that we've had, we've created a society where it is very difficult to take on risk. And I think that that's hurting growth a lot too. Man, when I was down there, I kind of thought, well, I do see a little bit of flow. I guess I could try going along with this flow on a reversal, but that seems like a risky trade, and I don't have any specific reason to think that that flow is going to come through, so I didn't trade it. But the flow did come. I don't think I should say that that was a prediction. I just kind of find it curious that I noticed this flow so early. Doesn't usually play out that well. Now the question is, do they push the other side of this? We're almost to 10K contracts. Like 10K is the most I would expect in this situation. So if we're getting more than that, then we've really got something weird going on. Okay. The Goldman Sachs earning call is going on right now. You might see some market reactions to some of that. .7% GDP growth at government spending 50% of GDP, and it used to be 3% GDP growth at 30%. Yeah, but again, is that because the government is taking in too much revenue? It probably is playing a part, but how do you attribute it, right? We'd need a study to show that, you know, if government spending was less, then our GDP growth would probably be this, right? I really think, though, you're like going back to the Obama era. Like this goes back way further, right? The problem that I see in our society is a reluctance to take risk. So Gen Z is it permutates every area of our society, every issue. You took the long at 10. Wow. Okay. Well, good job. It was, you know, like the thinking in my head was like, okay, so I had the stop limit orders in there, and it wasn't doing it. It was like they should be able to slip through here very easily, and they're not. And then I saw the big order, and I was like, okay, so that is a setup in the flows for a reversal, right? And it's a slow day. We could expect this to reverse through around, but since I don't have any real reason to expect that flow, it's kind of a risky thing for me to take. Now you could say, well, you could go long here on the expectation that it's going to keep going and maybe bust the highs. That's what I'm thinking now. But it has already been too much volume. There's already been 10,000 contracts. Yeah. The risk aversion of Gen Z. So look, if you look at every issue that we're having right now, you can really bring it down to an aversion to risk, right? Like, young people these days are not having kids, right? Well, having kids can really be thought of as an investment in the future. Okay, people only think of children as an expense, but they really are an investment, right? You are creating a person that over the course of their life will generate millions of dollars. I mean, the average person, like their lifetime earnings, you will come out to $1 million for most people, even if they're just average income, right? So it is an investment in the future. And people are afraid to take that risk. It's too risky for them, right? It's like nobody wants to do anything unless it's a sure thing. I think you can even look at some of these things like the transgender issue, right? Like, here's the thing, and this goes for having kids as well. You're talking about an issue that every single one of your ancestors was able to overcome, right? Okay, because 100 years ago you couldn't have gender change surgeries, right? Okay, where you're saying the risk of you suiciding is so high, you're now willing to take it. You need to take all of these medical procedures. All of your ancestors dealt with this, right? They're not even willing to take the risk on themselves and their ability to handle a little difficulty, you know? And they don't think anything matters and there are no consequences. Well, but I think it's the opposite. So for instance, I see kids and they will say, I shouldn't do well at school. I don't need to do well at school. It doesn't matter. Okay. So I say, well, you should be excellent. So what is excellence? Excellence is an investment in the future. Excellence is saying, I'm going to do my very best at everything because at some point in the future, it's going to matter. And if I'm excellent at everything, then I will have that ability to do excellent work and it will pay off for me, even though there might not be a direct reward for me in the short term, right? That's what excellence is. And they don't want to do it. It's as though they're afraid of the success, right? It's like, if I do something, what if I'm excellent and it doesn't work out, right? Then that's bad because I was excellent and I didn't need to. And what if I'm excellent and it does work out? Well, then that's bad because I have more work, right? And that means even more risk taking, which is kind of the scary thing about it, right? But that's life, man. Yeah, I think that almost every major societal issue that you can point to that we face right now can be distilled down into the younger generation's unwillingness to take on risk. And the result is lower growth. Lower growth. It's the new social contagion, like the fainting of, well, I don't know. So what is the cause of this? Well, I think we could come up with a couple of different theories, right? I think one theory is that millennials are just still traumatized from the 2008 crisis, right? I also think that another thing that kind of plays into that is that the risk taking that you've seen in the last 10 years has all been kind of degenerate, right? Like there was like, this is all stupid. Yeah, cryptocurrencies, all that sort of stuff, right? So that's a part. But even like just with the like with the pandemic, it's just like you're just scared. You're so scared of the flu, like here again, or something that's equal to the flu, essentially. It's an unwillingness to take on risk. Another theory would be that our society has become more feminized, and women are less willing to take on risk, right? So this is actually a really interesting subject. I think I was watching this, I don't know which news program it was, but it was basically them talking about artificial intelligence. And I think they were talking to like the Google CEO, and they said, okay, so like, and they were talking about emergent properties. Like there was this one language model that they passed it in like one sentence in an Indian language, and then all of a sudden it was able to say stuff in Indian without that ever having been part of its data set. So they call these emergent properties, and they're not quite sure how some of these emergent properties happen, although we are learning all the time. And so the news person asked him, it's like, so you're unleashing artificial intelligence on the world, and you don't really understand how it all works. And Pai's response was, well, we don't really understand how the human brain works, right? But I think there are a lot of parallels between machine learning and the human brain, because I mean, the human brain works on a neural network to some extent, right? It's like a very advanced neural network. So we can kind of learn some things from it, right? And when I go through and I do my back testing with models and having messed with this stuff, there's a couple of things that I've learned, right? One thing that I've learned is that the sequence of the training matters. So if you come in and you teach the model certain things by giving it a training set that to help it master a certain concept, right? Giving it the right foundations helps it come to the correct conclusions and makes its further trainings more effective. So like the order that you learn things matters. And from what I've found, the things that you want to teach it first are purely the mechanics. And that's the way that the human brain works, right? You learn to walk first, right? Before you learn about how society works, right? If you give it some of that information when it's not ready, it can come to incorrect conclusions, and that can really harm the model, right? But the other thing that I've learned is that it's kind of hard to make a model that's good at everything. You just can't. Like if I'm going to go and I want to make a robot, I can make a robot that works really well in a trending market. It's not going to do very well in a range bound market. And if I want to make a robot that does well in a range bound market, it's not going to do very well in a trending market. And when I try and combine those with some sort of a filter to say, okay, if we're trending, use this, and if we're range bound, use this, it doesn't work. It's always better to just have one robot that's doing each of the separate strategies, and then when it's not its time, it just doesn't trade. That's always worked better, right? Well, I think the human mind is the same way. That's why, one, we have people that are going to be interested in different disciplines, so that we have different types of people filling those different roles. But there's this high level role that is necessary for our survival that has emerged in the differences between male and female, because male and female minds are not very different. They're so largely similar, but there are like small, minute differences. One of the differences is that women are more risk adverse, more sensitive to danger, right? And men are more prone to taking risk. Those are the roles that you took, right? So if we as a society become more feminine because women are participating more in politics and so on and so forth, the end result that you're going to get is less risk taking. And that's what I've seen through my life. And there's some real advantages to that, right? They've shown a lot of studies that show that women tend to be better money managers. Of course, it's best if you have like men and women that are managing the money together. That's even better. But the women's approach to risk can be really helpful in investing, right? But it can also be not helpful when they don't take the risk and they should be, right? So how do you sort that out? I think that what is going to have to happen is our society is going to have to realize what are the tendencies in politics when it comes to women. We know what that is with men because we've had time periods where only men were involved in politics, right? Now we're putting women into the fray. We're still kind of figuring that out, right? I think that we're going to have to figure out those tendencies and watch for them and caution ourselves against them and so forth, to say, well, one of the problems that we have is that women will play things too safe and will set up so many safeguards and so forth in the society that it's impossible to accomplish anything, right? That's what I think. That's one theory about why are people less willing to take on risk these days. The new social contagion, like fainting of Victorian England. Give us that comment. Man, this is trending up, man. Uzi got out at 14, but geez. So we're now to 15,000. I think it's kind of funny that all happened after we had the central bank speaker. Like, I didn't know that there was going to be an interview coming out like that. Came out, there was a little bit of downside action, and then like that was the low, basically. They made one little tiny push a little bit lower, and then that was the end of that thing, and it's just all been long since then. And this was a flow. Yeah, I could have taken this for sure. If I had been expecting it, and I had gotten in early enough, I could be riding the flow. In fact, I'm not quite sure I understand why Uzi got out at 14. If I had gotten in on 10, I think I'd still be in. I think I'd be looking for, can they extend above 17? So I guess that was a missed opportunity for me. I think I was kind of reluctant to do it though, because I think that I'm much preferred being on the short rates side of things. Like, if I'm going to catch a trend, I would much prefer to be long interest rates, because that's just what the longer term trend has been recently. Twitter continues to be really quiet today. You think ES will reach 4210? Curiously enough, the S&P 500 started out with a sell, and that might have been prompting some of the buying in the treasuries, but it's kind of moderated and turned back into a sloppy range-bound mess again, like it was yesterday, right? In the Philippines, culturally, the female is the brains in financial matters in the family. Well, in my household, I try to separate things out, right? Like, it's just very difficult for me to stay on top of things, like all of the household things, including like the utility bills and things like that. So I mostly, she takes care of those things and pays them, and I just double check by watching the bank statements every day. Like I said, it's impossible for one model to be good at everything. So it's better, in my opinion, to pick which things you're going to specialize in. Which is also, by the way, unpopular opinion. This is also a good reason to get married young. because you still have time. When you're like 20, from 20 to 26 to 30, you still have time. Once you get to like 35, your brain starts to crystallize a little bit, and then it becomes very difficult to adjust to that sort of stuff. But that's also where having a cultural expectation does end up being useful, because now you've been preparing for your whole life. It's not like men and women can't do the other role per se, right? It's just that the cultural expectation makes it so that by the time you get to that age, you're already pretty well developed and good at it, right? Now, the other issue that we have in our society is that, like the female brain is a lot better at like doing the social things and getting along with people and stuff like that, and that has become a larger part of the economy than like physical labor. So now we're seeing this situation where like men's value in the marketplace is basically eroding. How do you deal with that? I don't know. I do know. I have an opinion on this too that I forgot about, but I think is a good point to bring up, because I would like to see an economy where what I would call micro entrepreneurship. So basically an economy where, you know, with the advent of AI and things like that, you're going to be super productive. So we may see a point in the future where people don't have to work as much. Like they're talking about getting rid of, moving to a 32-hour work week from a 40-hour work week, and that most companies that have tried it have been pretty happy with it, for instance, right? I think in the future you see a situation where you're going to have a lot more time, right? And so in that world, you're going to have a lot more small businesses, and everybody is going to have some sort of side hustle. I mean, I think we're already kind of getting to that point, right, where everybody has a side hustle, right? And both male and female have roles they can play in running a business, right? And if you work together on running a business, you're much more likely to be successful. You know, like when they look at startups, it's better to have a co-founder, but you want that co-founder to be somebody that you already know. Co-founders that were like strangers before the business venture don't work out as well, but it's still better than being a solo, right? So who would be a better business partner than your spouse? We've been pulling our people on moving to a 4-day work week and 32 hours would be tough because the hours on a job aren't really predictable. I heard on a podcast where they talked about the number of men who are choosing not to work and how they are largely single, whereas married men tend to engage in the workforce, and how women who are no longer working are rising as well. Yes. Well, some cultural, if we continue on the current trajectory that we are, given current trends, certain cultural expectations about what you're looking for in a spouse are going to have to change, right? Because if we're moving to, I shouldn't say if we're already moving into a world where more women are working, and in many cases the women are making more than men. Like there are some statistics showing that, like, you know, there's like the woman disadvantage and all of that sort of stuff. Well, it's because you get pregnant and they choose not to work as long and those sorts of things, right? But when you adjust for all of those factors, women in many industries are getting paid more, right? If you insist that, if you're a woman and you insist that your spouse makes more money than you, like that severely limits your options and doesn't really make sense in a world where women are starting to make more than men. So you're either going to have to go back to the traditional role of things, which honestly there's a good argument for, because when you have kids, it's really, really helpful to have one person just stay home, right? Or you're going to have to say, it's okay for me to marry a guy that hasn't really had a very successful career. Of course, you don't want to do that because that means that he's not a successful man, but like, You're changing the role of a man, so you can't like change the role of a man but then still hold him to the same standard. That's just going to result in that's going to leave a lot of people unhappy. Okay. You know what I mean? Switching to 32-hour a week, boss doesn't pay well, I think that the goal is to change full-time to be 32 hours so that they would still have to pay benefits and stuff. Don't get me started. It really bothers me how so much of your benefits are dependent upon corporations these days. Having your medical benefits and your 401k and all. Oh, whoa, what's going on? That was a little weird. Okay, I don't think that move, it looked really big to me on the chart in ES, but I don't think that was a move that was so large that it couldn't have just been endogenous, meaning, you know, relating to just what's going on in the S&P 500. I am hearing my news squawk say stuff about like things relating to China and Russia. So like one headline I see is China is to conduct military exercises in the sea near Guangdong. I highly doubt that that's what's causing it, right? But the S&P definitely dumped there. The treasuries pulled back quite meaningfully from that trend, so I had made the right call there on, you know, not really trying to go along with it beyond it reaching the high. Let's see here. So going back to what we were talking about. Hey, what's going on? I don't know. Let's keep an eye on it. We'll keep talking. We'll keep an eye out. I think that the S&P was just having a little bit of a fall. I don't know if that move was actually significant. Was driven by informed trading. Which would be easy for laptop people, back end sweat people, not so much. No, yeah, it would not. But, you know, some people think that the advent of AI will push more people back into physical labor, which I think is kind of funny, actually. I don't think that it's actually going to turn out that way, but you know, maybe you will see an economy at some point in the future where people make so much money, they're so productive, they're able to pay for most of, you know, their living expenses, not working, you know, only working 20 hours a week, right? And then if you have that extra time, maybe you spend that extra time doing sustenance farming or something. That would be, I think that would actually be really cool. Get some, you know, physical labor in there. Could potentially be more sustainable. Potentially. Probably actually not more sustainable. Everybody having their own small little garden, that sounds very inefficient. Elon Musk spreads misleading claim about Mark Zuckerberg donating millions to get Biden in office. Yeah, okay. He did spend millions of dollars on political initiatives that did end up putting Biden in office, but it wasn't just Biden, and it wasn't. Yeah, okay. Anyways. I'm in the camp that laptop people will suffer more from AI than labor people, like not like catastrophically, but certainly quantifiably. So, yeah, okay, so there's a couple of sides of this, because part of the problem is we can only really know too much about the current iteration of AI and and so forth, right? And this is changing really fast. So like our ability to predict this is like very limited, right? But something that I think may happen is that you will get robots that are able to do labor, right? So like building a house in particular, if you have robots that can help you build the house, right? That's going to make house building a lot more efficient. And that would really, really harm the labor, right? And the issue kind of comes into what are the things that the human can do that the robot can't, right? So right now the human can move around and manipulate things very easily, and that's very difficult to do with an artificial intelligence. But the kind of the models that we've been creating and so forth are making like a really big strides. And so robots that can do labor, it looks like they're already able to make robots that can do that, and it wouldn't surprise me to see those actually being actively used in 10 to 20 years, right? The ratio of robots that will be able to lay block to robots that will be able to shuffle data and send emails won't be comparable. Well, yes, but the issue is that now on the other side of it, which is, you know, the white collar jobs, right? There are a lot of white collar jobs right now that just involve shuffling around and filtering data and so forth, right? So a lot of those jobs will benefit from AI. So you might not need as many of them, right? But from everything that I've seen, those tasks just end up being bottlenecks, essentially. So any performance improvements that you make in that area will create more jobs than it eliminates, right? People will move into different roles, right? And that's another side, is that there are a lot of roles right now that really require, you know, like certain types of programming, right? You need to be a programmer, and there are lots of people that aren't that technically oriented. They'd be able to get into that, right? But what are the things that the robot is not good at right now? Well, I can tell you. So these language models, they don't use logic, right? They're just predicting what the next text token is going to be. Okay, so they don't use logic. They don't use math or anything like that. And then a really, really big problem is planning. They're not able to plan things out, right? So and I don't know how far away those things are, right? Like if you had robots that could do all of those things and plan, at that point, when you have like general artificial intelligence, then like every job is up for grabs, right? But I don't think that we're actually ever going to get there. I think by that point, you know, you're just going to have the humans are just going to move up into other areas that the robots can't compete again, right? So like, is it planning, certain creative endeavors, you know, planning a business, that sort of a thing, right? So that's, I think I'd still put us in an area where I think that whatever kind of jobs the AI eliminates, it will just create more of them, right? And even when it comes to like the labor jobs, right? I think that it will just end up being like whatever jobs the robots eliminate will just be replaced by better jobs elsewhere for the people. So I don't think that the labor people will really suffer that much from it either. There will be like growing pains, and people will have to transition into different roles. But I do not agree with the sentiment from people that artificial intelligence will result in less jobs for humans. Humans will also always be able to work in conditions delicate. Machinery never will, but the machinery at that point I don't think will be so delicate. there's also this other side, which is the thing that I really don't think the robots will ever replace is things where you want to interact with a human. Okay, like a call center. Yeah, I hate it when I get the robot. I immediately start yelling operator so that it sends me to a person, because those systems are so effing useless, man. They're terrible. I hate them. I hate them. I hate them. You know, you're still going to have these jobs where you want a person interfacing with you, and those jobs could become more valuable as time goes on too, right? Like that's where it's like right now, manning the front desk at a hotel, right? That's not the best paying job, right? In the future, it could be more valuable, that having the right person there in the job that is good with people ends up being very valuable to the company, because so many other things are automated, right? Or sales jobs, right? Yeah, Walter. One of the problems is that a lot of automated systems aren't designed very well, but okay. So the treasury's bounced there a little bit. I think that if I want to go long rates, here's my chance, but I'm still a little bit confused by what's going on. Oil's took a hit with all of this. Gold bid very aggressively. This has been going on for some time. When did gold shift? Gold shifted at around the S&P 500 open, so about 40 minutes ago. I am... I am starting to get more into, I feel like we've missed a key headline. When Google talks to me while renting, I ask questions and it responds, but some things it doesn't get my questions, and it keeps repeating the same question over and over with a realistic voice, and it feels uncanny. Yeah, so one of... So you're hearing more Ukraine headlines, but I'm just not seeing the relevance to the market. But yeah, gold is spiking up really hard. The gold spiking up now is the one that was really like flashing red on my radar now. Like, okay, something's up. Yeah, it's happening all over factories all over the world where robots replace manual labor only a matter of time. Yeah. I mean, like, that's the thing, is the robots are going to replace all of the boring jobs that nobody wants anyways. Like, it's just going to enable you to go into better stuff. It really will. And I really don't think that it's going to reduce the number of jobs overall, right? If you're concerned about, like, the future trajectory of the economy, the thing that I would be concerned about is the decline in the population. That we're at a point where demand will be the highest that it will ever be. And what happens after? I'd be more concerned about that, right? There you go. The creator economy is going to make everything more efficient. Yeah. Which is all the more reason for us to try and come up with better social media networks that don't just focus on attention, so that we don't drive everybody to madness, right? Okay, so they came back up there to those highs pretty quickly and easily, and the volume is still long. So even though I'm kind of more leaning towards taking a long into treasuries. I don't think I can justify it here. And the S&P 500 is still selling, it appears. Man, I really feel like I'm missing something. Okay, so now I can see the zero hedge story about Goldman. Brookfield defaults on 161 debt for DC office buildings. Let's look at this. With recent stress in the regional banking sector, sentiment in U.S. commercial real estate, and especially the office sector, has turned negative as investors prepare for potential spillover effects, with JP Morgan, Morgan Stanley, and Goldman Sachs all joining the gloom parade, especially as high-profile defaults continue to make headlines as borrowers faced higher debt service costs and refinancing becomes much harder ahead of a $400 billion CRE debt maturities this year alone. I'm going to say something here in Discord. The latest headline fueling concerns about a potential CRE crisis involves Brookfield Corp. Fund defaulting on a $161 million mortgage for 12 office buildings in Washington, D.C. According to Bloomberg, the loan was transferred to a special servicer working with the borrower to execute pre-negotiation agreement and to determine the path forward. Real estate data firm Green Street said DC office space values had slid 36% through March compared to a year ago due to rising vaccines amid the rise of the remote hybrid work post-COVID. Gold standard measure of occupancy rate trends is still the card swipe data provided by Castle Systems. The average office occupancy across Washington, D.C. is only 43% and has yet to recover to pre-pandemic levels. Brookfield also defaulted on debt tied to two Los Angeles buildings, the Gas Company Tower and the 777 Tower. A spokesperson from the company blamed the pandemic for its CRE challenges. While the pandemic has posed challenges to traditional office in some parts of the U.S. market, this represents a small percentage of our portfolio. Brookfield could potentially be the first in a series of companies defaulting on their office space loans. We've pointed out that the state of the CRE market is in dire shape as delinquency rates across property types, particularly office buildings, are rising. The lending environment is getting tougher ahead of $400 billion in CRE debt maturities this year. Sorry, CRE means commercial real estate, okay? Meanwhile, the collapse of Silicon Valley Bank has put a magnifying glass on regional banks, and their CRE loan books remain a significant concern. As shown below, JP Morgan's data as of February 2023, regional banks account for a staggering 70% of total commercial real estate loans, excluding multifamily, farmland, and construction loans. This will cause an acute credit crunch in the secondary and tertiary credit real estate markets. And then there's Bank of America's Michael Harnett, who recently said, you know what commercial real estate is? It's a boa constrictor tightly wrapped around the economy, suffocating growth for the next 2 years. Bloomberg pointed out about a dozen buildings in the Brookfield portfolio. Occupancy rates averaged 52% in 2022, down from 79%, in 2018 when the debt was underwritten. The onset of a CRE crisis in the office sector will likely spark significant issues for regional banks and the Fed. Although Chief Economist Torsten Slok recently noted, in other words, with the commercial real estate bubble bursting, we are likely to enter 3 years with low growth, similar to what we saw after the housing bubble burst in 2008. Put differently, once the Fed starts cutting rates later this year, interest rates will likely stay low for several years, and QE is likely to come back in 2024. Will Brookfield be the first of many to default on office building loans this year? So I think that's a reasonable theory. We've still got time left. 114.16.5. We're kind of stuck there though. The 30-year is poised. Now, with all of this movement, the spreads have not really shifted. Curious. I don't know. They look pretty content right there. Okay. So the 30-year looks like it wants to drag them up. I'm wondering if we might get, well, that might, because if it was a 30-year that drove us, okay, so there it went to 04. If it was a 30-year that dragged us up there, that would be a flattener. I mean, I guess the yield is a little bit tilted towards flattening, but I'm not sure if the scenario that I had just laid out would lead to flattening. I would think that it would be more like a steepener, right? But perhaps the 5-year catches up and goes here. But for that one, the 30-year did bust higher, and there's a little bit of a stop run, and the yield curve flattened a little bit. And I saw a little spot to try and catch somebody, so I think I can kind of, that gives me enough room to see how this goes. Still in here? I'm still here. You still here? I'm wondering, so this thing that we just read from Zero Hedge was coming from a Bloomberg story, right? And that was posted at, it was posted at 5:47 and updated at 7:53. So about 20 minutes ago. I'm wondering, I think that might be what's driving this flow. Or something along those lines. What do you mean you're not working today? It's only 8:20. You might have things off because of daylight savings time and stuff, but it's only 8:20 my time. We still got 40 minutes. Okay. Goldman stock is tumbling this morning when the lack of proper net interest income revenue stream and over-reliance on trading has for once come back to bite it, as the company's all-important FIC division reported far uglier results than most had expected, leading to a big and very rare miss in Goldman's revenue line. I'm going to read all these numbers. FIC sales badly missing the 3.93, badly missing 4.19. Yeah, it seems like everything missed. Goldman also offloaded a chunk of its $4 billion Marcus loan book, which led to a $440 million reserve release that helped boost profit more than analysts expected, but earnings were still down 19% from a year earlier. Net revenue included a loss of approximately $470 million related to the partial sale of the portfolio and the transfer of the remainder to held for sale status. Unlike other banks which suffered credit losses, for Goldman, the quarter one credit loss provision was a net benefit of $171 million, a vast improvement to the consensus estimate of a $128 million loss. So Goldman's loss is resulting primarily to their Marcus book and not to, you know, some of the loan losses and asset losses that some of these other banks are dealing with, right? They're much less exposed to that stuff. While the confusion over the Marcus loan book sale was bad, the big miss in FIC was the gut punch. FIC's income trading revenue tumbled 17% and badly missed expectations, leaving Goldman the only major Wall Street bank so far to have posted a drop for that business. Incidentally, the revenue figure for FIC for the same period last year was up more than 20%. And that's really interesting. Again, according to the bank, the drop in FIC revenue reflected significantly lower net revenues in intermediation. That said, the modest beat in equities trading revenue helping to soften the blow. Equities revenue reflected significantly lower net revenues in intermediation, partially offset by significantly higher net revenues in financing. Investment banking revenue of 1.58 billion beat estimates of 1.54. Turning to Goldman's asset and wealth management business, which was the closest thing GS now has to a prop desk, the bank reported quarter one net revenues that were significantly higher. It is also here that we find some more detail on the 470 million loss incurred as a part of selling the Marcus loan portfolio. Private banking and lending included a loss of 470 million. Oh no, we've already read about that. Commenting on the quarter, Goldman Chief Executive Officer David Solomon said that events of the first quarter acted as another real-life stress test, demonstrating the resilience of Goldman Sachs and the nation's largest financial institutions. He added that our deeply rooted risk management culture, strong liquidity, and robust capital position enabled us to continue to support our clients and deliver solid performance. The market disagreed, and following the disappointing FIC numbers, hammered the stock down more than 3%. In the process, depressing the Dow, where Goldman is one of the largest members. Okay. So they didn't provide us too much more information, but I'm glad to have read that. Okay. I think that what we're seeing right now in the markets, even though we don't have a direct headline, the best explanation I have right now is concerns about commercial real estate. This has been something that's been brewing for a little while, and if it does blow up, would really blow up hard. So I think now is a good time for us to be on our toes. There's a guy on YouTube as a quant, can't remember his name, but he was trying to show that these institutions make their money in fees and money management, not trading. His argument was that no one can trade profitably. Well, some people do have that view, but there's a lot, I think that there's a lot of examples like Citadel and Renaissance Technologies that kind of contradict those arguments, right? So the thing is that, again, the market overall, or the world overall, believes that the market is efficient, which we know to be false, right? So if the market is efficient, then you shouldn't be able to make excess profits from trading or money management, right? But it's not true. There are people that do trade profitably. So, but the thing is that those are real outliers, right? The majority of people out there, they don't have an edge, and yeah, they do just make money from management fees and stuff. It's true. So that's why I would never I would never advocate to somebody, take out your life savings and then go and trade it. Okay, no, don't do that. Trade as a hobby. If you find an edge and you do well with it, then good. And if not, I hope that you're still contributing significant amounts to your 401k and your IRA and putting them in index funds, right? And I believe that from being involved in the market every day and stuff, that it will help you make smarter decisions on how you manage those. That you're going to be more likely to contribute to your IRA, for instance. That you're going to try and reduce your expenses. That you're going to consider the risks associated with, because you want to trade it for a living, right? Then you kind of have to set your life up a certain way to be able to deal with inconsistent income, right? So you're going to want to reduce your expenses as much as possible, for instance, right? These are all areas where in the long run it helps you, even if you're not super successful with the day trading. But there are some people that do trade profitably, like members of Congress. Yeah, ZN got caught pretty good trend there. Like when we busted those highs, they went pretty good. Interesting. Goldman Sachs has changed the ECB call and now sees a 3.75% terminal rate. Ah, that could be it. I need to get more details on that. Oh, Alligator's posting me a link about Barkin. Richmond Fed president is set to speak. Okay. When is that? 8,000 at 20? Huh. And it ticks up. And it ticks up. Pretty decent bid following it too. And it's still iceberging? What the? Huh. I'd say somebody thinks they know something. Dude, whoever it was that was buying down there at, I mean, I know Uzi cut it at 10 just from reading the order flow, but like there was an informed trader down there. They pulled off a good trade today. Okay, that was a little, okay, so that might have been the last little pop from that leg of meta order. Given the situation, I'd say it's pretty likely to get a third leg, although it'll probably be a while. I don't know how big it will be. Man, that's a really big order up there at 22.5. Like when we were looking at 3,000s down here at the lows. Oh no, maybe it was a 4,000. It's very curious to me how this all plays out. Like, especially when you come into the volume profile here in ZN. you know? Like, this is right where there had been support before, and now they're bouncing here. And it seems like they're bouncing on like real reasons. Oh, I don't know, man. This is looking like an okay spot. Big MBO offer pulled out in ZN? What level? I didn't see that. ES is still selling here, man. Like when we had that further little push, and then ES started diving. So now we have to consider that this could be you buy the treasuries up first and then you sell the E-mini. Right? When you get that kind of flow, that can lead to some of the strongest outflows in equities. It's only 50. Yeah. And you know what else is that there was a lot of transactions up there in the top that kind of moderated the cumulative delta somewhat. It's not giving me a very good out here, unfortunately. The E-mini did its selling again. I'm looks like they might be taking a break. So I can see some reasons for me to try and hold this, but for my kind of intraday trading, it's probably best for me to try and find a spot around here to get out. I might be able to turn it into a swing though. This has got to be so. This reminds me of that study that where they found that when there was like a big spike in volatility, that if the market could find a headline to attribute it to, that the volatility quieted down more quickly. In this market, it seems like there could be some headlines driving it, and that there probably is some informed trading behind these flows, but we can't exactly pinpoint what it is. And so I think it's likely that the volatility lingers for a little bit more. Okay, so they're having a little bit of trouble at 19 and 19.5 now in the 10-year. See, this is going to do this thing where it's going to come all the way back to my price, isn't it? By the way, this volume here in the ES, I'd say, is pretty decent as it's slamming into those lows. One of the disadvantages of the tick aggregation is that it doesn't give you as good of a feel for the pace of the tape. Another thing I should note is that it looks like the overall liquidity in the treasury market has gotten a little bit thicker, huh? That big order just slipped down a little bit. So what the picture I have in my mind right now is there's probably some buyers taking profits in here, and that's why you got the thick offers. Kind of sucks. I think I made a mistake there. Like, I saw the spot for me to get out, but I wasn't getting quite the price that I wanted, so I kind of waited for it, and now like I'm waiting too long and I've lost half of it, right? And I should have just taken the one tick less. Well, for today's title, I want to put reversal as risk offloads return. Ouch. It looks like whatever was driving that buying is gone, man. I thought that it was going to balance around 20. Instead, it seems to be filling in that gap, basically. Okay, the 5-year bid absorbed a big hit there. Cool. Southwest Airlines halts all flights due to a technical issue. Oh boy. As if Southwest hasn't had a bad enough year already. Not quite able to recover the 19 yet. I mean, it was only 400 contracts to sell it there, but I want to see what happens there to 077 in the 5-year. Another thing I'm noticing here on this little bump back up recovery here, that once again it seems like the 30-year is leading the way. So again, if it was like a true risk off flow, the one thing that kind of has me holding back and that's preventing me from being like, oh yeah, like this is a good swing, we should just hold this long for like a week or whatever, is okay. 077918 to clear, is that it's not steepening. If I saw the 5 years start to lead in a meaningful way, that would make me feel a lot more comfortable on swinging this. Yeah, okay, now they're able to hold those 7-7. They're still kind of in line, like the 30-year one tick ahead, and then the 10 and the 5 in line with each other. Come on, 5-year, I believe in you. What's your question? AL? I didn't see a question. I saw you mentioned a couple of things. Hmm. No. Well, that doesn't feel very good when you put out an easy order and nobody wants to fill it. I think I should be able to be patient here, though. Do you use Auction Vista? No, I don't. I don't find the Auction Vistas very useful. I mean, I think that it's largely kind of a preference thing, but there are some important things that you can see on the DOM that you can't see on the Auction Vista. So at the very least, you want to have a DOM either way. Does having an Auction Vista up as well, is there some benefit to that? Sure. I personally can't justify the space. Well, now it's just gone dead. There we go. Okay. I really hope I don't regret taking the quick profit. You know, I'm primarily taking that off because I don't want to babysit it all day. It really makes me anxious when I have a swing trade on and I'm trying to do work and I'm just thinking about the swing trade in the back of my mind. It really kind of sucks. Kind of seems to me like the way that would be the best for me to trade that I'm not in a position to actually do. Not sure what to do about that, but sorry, did it just tick again? Oh, we just want today. 6564. Nope, okay. The way that it's going here still kind of suggests that like meta order leg is done. I don't know if there'll be another leg or not. Obviously, we should have gotten onto that flow a lot earlier, but as soon as I had an idea about what the flow was and like a setup, I went for it, and we did catch a good run. And how I got filled on it was really good. I was able to pick somebody off, not get any adverse excursion on it. Like the timing of it was perfect. We screwed up a little bit on the exit, but in the end, we were still able to do okay with that one. And it could have been a swing if I had the what is the word? If I had the determination to stay in it, it could have been a swing. So if it swings, I'll pat myself on the back, even though I didn't hold it, right? But no, I thought that was a good trade. It was certainly better than some of the trades that we had last week, huh? I'm a little concerned for the market though. Like, there was some real risk off flows coming in here. And there was some real money moving, and one would kind of think, well, where would the selling come from? But it's coming from somewhere. I think Auction Vista is good to know position magnets. Well, but it doesn't really do that. So here's two things. Okay. One is when you have a large order, people will say that the market is likely to move up into that. Now, if I look at the current market, there's a little bit there at 082 in the 5-year. That probably doesn't count because that's probably just the liquidity rolling in front of it. A better one would have been like the 4K that we had above us at, I think it was at 24 at one point, but they didn't get there, right? There's a 4K at 08. They didn't get there, right? So what I've found is that the market tends to move in regimes. So you'll have a period where it will go to those big orders every time, and those tend to be more trending markets. And then you have these other markets where it will stop short of them every time, and those tend to be the more range bound markets. And knowing which one you're in, I've never been able to find a way to tell or to sort that out purely from a technical perspective. So that's the first thing, is that it's really, really common for new traders to come in and come up with this heuristic that I'm going to go in the direction that the big order is at and everything. And the market's more complicated than that, unfortunately, right? So that's the first thing. And the second thing that I would say is that you can see those orders just as easily on the DOM. I mean, they stick out like a sore thumb to me. I don't need a color. I can just see there's 4,000 contracts at 08, and that's like twice as much as there is anywhere else, right? And then the third thing that I would say is that when you look at these auction vistas, so I think we can open this up for the 10-year and see this today. Yeah, it should yeah, okay, so I think I need to change my interval though to more like 60. Okay. Yeah, so when you look at it now, look, here was a big one. They went into it, they cleared it. Here's a big one. They never quite got to it. Okay. So this one's probably a bad example, but often what will happen is you will see the big order show up right there. And a lot of beginners will think that it bounced because large liquidity was placed there. But it's actually usually that it had already bounced before that large order showed up. That it's like the liquidity gets left behind one after they reverse. Did you find the study you were looking for yesterday? No. So to expand on that, basically I have written a strategy that backtests point of control value area, high value area, low daily levels. And I'm caching that data. So I have the volume profile information going back a year, but I need 4 to 5 years. So when Uzi gets done building his machine, he's going to try running it because we think that his data might be able to give us up to 4 years. They treat, yeah, I think that new traders will treat the big orders as support and resistance, and then they'll get into a market where it will slam through them every time, and they're like, what's going on? Like, I think these are important things to note, as I really think that the better way of kind of approaching those kind of technical factors is more of a benchmark, right? Which is to say, they're not really very predictive things. They're just not. But like, they will give you signs, really clear signs after the fact. Like you'll see the aberrations and you're not sure if that means continuation or reversal, but then afterwards you'll go, oh yeah. They weren't able to push down through here, and then to get through the big order, and so then you had a reversal. Well, okay. Was that really why it reversed? No, in this case, there was a large buy meta order came in. There's 2 legs of it, right? But it's just, you know, I guess what I should really say is that I'm not a fan of the Vista chart because it drives people towards applying technical analysis to order flow. Again, right? Now, if I have a reason to think that there's a buyer coming in there, and then I can see and then I see all of those signs there, and it goes up, that to me is kind of like, oh yeah, no, the scenario that I thought was going to happen is definitely happening, right? Benchmarks, right? It's not the predictive thing, but then it's a benchmark, and it becomes a very effective reinforcing mechanism to see that the trade is really going the way that you want, and that you want to hold it and so forth, right? I think they're trading, or well, no, they're trading. They're trading Technical. And so here's another pet peeve that I have, Lucas. I think that Gary Norton is wrong about what order flow is, because Gary wants order flow to be a style of trading that he has a that he's the expert in. And so anything that's not his style of trading is not order flow. And I think that that's just entirely incorrect. Order flow is referring to the data. It's referring to the type of data, which is to say price and volume informed by limit orders. And once you have the limit orders, there's a couple of different things, pieces of transformations and analysis that you can do on it, including cumulative delta, right? You have to have the best bid, best ask to be able to do cumulative delta, for instance, right? That's order flow, right? Anything beyond that is a style of analysis, right? So what a lot of people do is they perform technical analysis on order flow. No, I'm not using a definition that favors my view of markets. I'm using a definition that is used most widely in the industry and is used within the market or the empirical research. And I'm also using it in a way that is much more accurate to the way that other traders just use it. Right? Order flow is not a strategy. Order flow is not a group of strategies. Order flow is data. Right? Scalping is a strategy. Market making is a strategy. Order flow is not a strategy. And I think that calling it a strategy is not useful. So like it comes back to like etymology, right? Because there's one thing which is like we can look at like what is the historical use of the term and how do people use it today, and therefore what is like the most accurate explanation for the word. Okay, so if you were to take from that one, well, I think that the way that Gary uses it, he calls it a strategy, because he comes in and he says, well, these guys, they aren't actually trading order flow. Well, if they're doing analysis on order flow data, I say that they are. Right. But then the other side of it that you can take, I'm not going to, well, yeah, I'm just saying, when you said that, I'm like, I know exactly where he's getting that from, right? Because in his mind, it's not order flow, it's technical analysis. But I say if they're using order flow data, it is order flow, right? Yeah, data is what you analyze, exactly, right? And the whole thing that I'm kind of trying to say is that like there's a bunch of different pieces of data that you want to use, right? You want to use order flow data, you want to use correlated instruments data, you want to use data from outside of the exchange for like predictors of order flow, breaking news, etc., etc., etc. Volatility data, which is a little bit more technical analysis because you're kind of factoring in historical information there into volatility. And then risk management is not really the data, but the risk management is really more the data about you, right? It's factoring in data about you, where your position is, what your losses are, what your limitations are, right? So really all of those 5 pillars come back to a different piece of data, right? Order flow is one of those pieces of data. Anyways, I was saying when you read like the scholarly literature and stuff, that's the way that they use order flow. The order flow view of markets is something a little bit different. The order flow view of markets is a theory that was prompted by a study of the order flow. Okay. But the other way of taking it is what would be the definition of the term that I think would be the most useful to people. And there I would still argue that it's more useful to call the order flow the data, right? And the strategy that we're talking about, scalping, market making, whatever it is they have, right? Because limiting your strategy to just one piece of data is I think one of the biggest limiting factors that holds retail traders back, right? So that's why I think that, you know, when I teach order flow, telling people that order flow is just the data, I think that's more beneficial to them, because then they go and they say, okay, so this is just one piece of information, one piece of data. It's not even necessarily predictive, but it's one thing that I can kind of plug in there to assist in my trading. Just one part, right? And that's not all of everything, because otherwise they get you trap people into a dogmatic way of thinking where they say, well, if it's not this, then I can't trade that, right? The flow of I think that the way that okay, so I say that order flow. I gotta go. We can talk about it tomorrow. I'm sorry. Anyways, you opened up another interesting avenue of discussion. I'll see you guys tomorrow. Stay excellent, team.